Hello, everyone. I'm Lauren Kiel. I'm the general manager for Bloomberg Green, Bloomberg Media's brand focused on climate change and sustainability. And today I'm pleased to be joined by Kathy Bardswick, the chairperson for the Sustainable Finance Action Council of Canada. Thanks for joining me, Kathy.
Well, thanks for having me.
Kathy, you've been one of Canada's leading insurance and financial services executives, including time as president and CEO of the Cooperators Group from 2002 to 2016. So given your background in insurance, what drove your interest and focus in sustainability?
Well, through the lens of an insurance leader, I was increasingly becoming quite disturbed with the trends that I was seeing, not only in Canada in terms of the devastation that climate was creating for communities in our country, but I was also part of an international federation of co-op and mutual insurance that brought me into other parts of the world, and the devastation was happening around the globe. And as an insurance leader, I realized that I had a responsibility to do more, to lead more, to ensure that my organization was doing what it needed to do, and that I personally was contributing to solutions associated with what climate has been wreaking, the havoc it's been wreaking around the world.
And you were in that role, as I said, from 2002 to 2016. That's a time of massive change in the climate and sustainability space. So how did your thinking evolve from when you first took on that role, in 2002 to when you were leaving about 5 years ago?
Well, you're absolutely right. Oftentimes we are being critical of the lack of progress and the speed with which we're implementing the changes that are needed around the world. But quite frankly, through my lens, I can recall back in 2003, 2004, I was working with UN at the time, trying to establish a conversation in North America associated with principles for responsible insurance. We couldn't get the insurance industry in the room, let alone have commitments being made to the extent that is occurring today. Now, commitments are one thing, action is clearly what we all want to see. But I have to say that, in spite of the warnings that we're running out of time, we have made substantial progress. I think the level of understanding of how critically important solutions are required across the world and how critically important it is that we get our heads around and embrace the devastation that the planet is facing. It's occurring today, and I think we're starting to realize far more acutely today that time is indeed running out, that we do need to see far more action on the ground. And I'm quite pleased, quite frankly. I'm optimistic based on the level of commitment and action that I'm seeing globally.
And in your current role, you're really at the center of that action in Canada. You are part of the Sustainable Finance Action Council. This is a newly formed organization, May 2021, so it's really very, very quite recent. What motivated the development of this council?
Well, back in 2018, as a result of a pan-Canadian effort, both federally and across the provinces and territories, to put in place a climate response for the country, an expert panel was established to investigate what it would take to establish a more robust sustainable finance industry for the country, an ecosystem. And that expert panel tabled a series of recommendations in 2019, one of which was to establish the Sustainable Finance Action Council. And so fast forward to May of 2021, we did eventually establish this council. And our mandate is also reflective of a series of the recommendations that that expert panel had tabled in 2019 associated with disclosure, with better data requirements, with taxonomies that would serve the country and yet align with global ecosystems. And so our mandate actually is quite reflective of the work that was done by that expert panel back in 2018, 2019.
And you're just a couple months into the formation here. What progress have you made so far?
So we've established actually, two significant foundational governance structures as part of the Sustainable Finance Action Council. There is the council proper, which brings together 25 of the largest financial players in the country. We have the banking industry, the insurance industry, both life and property and casualty, and the pension industry represented in that group of 25. But we also have formalized a governance structure associated with the public institutions, the regulators, the securities commissions, to work alongside us, because we recognize that there is such an increased need and demand for cooperation and collaboration. If we are, in fact, to continue to make the progress that's desperately needed, we need to be working far more closely. We need to be aligned. We need to be supporting each other's mandates, the private industry with the public institutions that oversee our industries. And so there was recognition that these two governance structures needed to be formed. So we established them. We have them in play. We certainly have the sub-governance structures identified to focus on the three initial areas of focus for the council. And we have those sub-areas of focus resourced now and are finalizing the work plans associated with those three areas of our initial mandate. Those three areas being a mandatory disclosure regime for the country associated with the TCFD framework as a first area of focus. The second area of focus that we've resourced is looking at the transition taxonomy that this country needs, recognizing some of the unique challenges that Canada faces, and yet recognizing at the same time that we need to align, given our dependence on international markets and being a part of the international global system, that we align with that global ecosystem. So what taxonomies need to be in place, and what recognition of both transition challenges and opportunities for the country that allow us to remain within that broader international landscape. And then the final area of focus, and perhaps the most difficult one, I think, to appropriately define and ensure that we're adding value, is this question of data. To what extent do we need to shore up, enhance, strengthen, develop, new sources of understanding associated with climate data and the requirements not only of the private sector, but of our public institutions, our municipalities, our provinces, our territories, our federal government when implementing public policy. So those are the three areas of mandate. We've established those working committees. We're finalizing our work plans. We do have some initial work underway. We're now in an election for the country, so over the next few weeks, we have slowed our progress a little bit. But work is in earnest at this point.
You mentioned that climate data and analysis really are one of the fundamental challenges here. What areas within that do you think are most ripe for greater transparency or greater disclosure?
Well, I think, I'll start my comment by saying in an earlier life, I was providing leadership to the cooperators when it came to our data. And so I have, yes, albeit outdated, but I think an appreciation for avoiding the rabbit holes associated with data, because you can fall down those rabbit holes awfully quickly. So first and foremost, what we want to do as a council is really understand what is it we are trying to solve? What are the problems that we're trying to address when it comes to enhancing our data capacity as a country? Who are our audiences? What exists currently? What doesn't exist? Where are the significant deficiencies? And quite frankly, the work that's coming out of the other two areas of focus, the disclosure, the mandatory disclosure area of focus, and the taxonomy, particularly related to transition, is going to contribute significantly to a better understanding of where the data requirements are in this third area of focus. Now, having said that, we do know that there are substantial gaps that we all can identify currently. Very little level of sophistication associated with, measuring and monitoring scope 2 and 3 emissions as an example, or understanding when we turn our attention under the disclosure regime to what scenario building means and what it needs to reflect. And so there are some immediate, well-known areas of gap that the data team will turn its attention to. But we're going to be helped in that regard, and we will support. There will be, mutual supportive agendas in that regard, with a current pilot that's underway in the country with the Bank of Canada and with our federal regulator, OSFI, to drive, with the help of 6 of our members, drive a better understanding of what a fully robust TCFD framework will require vis-a-vis reporting and subsequently the data gaps that exist. So we're going to work closely alongside that pilot to ensure that as we develop out our recommendations associated with data gaps and where data needs to be addressed, that we're not falling down one of those rabbit holes that I mentioned earlier. So yet to be fully scoped and understood at this point.
You mentioned TCFD, and for any of our audience members who aren't familiar, it's the Task Force on Climate-Related Financial Disclosures. Why has the Council aligned to TCFD, and where are you seeing the uptake of TCFD in Canada?
Yeah, so, one of our early to-dos was to actually synthesize where country players were at and what the state of play currently was. And that effort resulted in basically an understanding that for the most part, we have embraced the need for a more robust disclosure regime. And so it's not whether we as a country embrace, it's how. What does that journey need to look like? And there's where I think the devil is in the details, because you have sophisticated players, both public issuers and non-issuers, who have been struggling with this and trying to get their heads around and incorporating additional reporting capabilities into their public reporting regimes related to TCFD. And they're learning as they go. Their level of sophistication is improving. They're figuring out where they need to do more work and where the heavier lifting is. But this is typically your larger, more sophisticated players who understand, many of them international in nature, who understand that this is a requirement, not only in this country, but globally. They need to be aligned. They need to get behind and committed to the ability to appropriately report. But we've got an awful lot of small players too. I mean, 70% of our economy are small and medium enterprises who don't have that level of sophistication. So our challenge as a council is to acknowledge that, the whether we do that is basically behind us. We understand and we embrace and we support the need. It is to drive out that level of detail associated with what the journey from here to a mandatory regime is going to require. Do we phase it in with larger players going first and our smaller players and less sophisticated players across certain sectors, following suit? What level of reporting will be required? Where are the data gaps that we need to build out in anticipation of being able to ensure that there is true value add associated with the reporting and it's not just a bureaucratic exercise that adds no value? So the devil is in the details associated with that TCFD commitment. But I will say that I am very pleased, and I won't say I'm surprised, but I'm pleased at the level of support to the commitment to move down this journey as a country, working hand in hand with our securities regulators across the country to figure out how best to ensure, excuse me, that at the end of the day, we are in fact adding value.
And Kathy, knowing you've been in the shoes as president and CEO of a large organization and thinking about some of your peers in this space, do you think that they understand the value of these disclosures? Do they think it's something that's still a big use of time and resources, or are they seeing this as something that's critical to how they're planning the future of their businesses now?
Well, I think it depends on the sector that you're in and the level of sophistication that you bring within the sector. Clearly, the financial sector in the country increasingly understands that not only does it want to better understand and find not only the challenges associated with what climate is doing, but the opportunities associated with areas of investment and lending and insurance. And we're seeing that across the globe. I mean, there is no question that the financial system is embracing increasingly, particularly capital markets, the desire to better understand where not only the risks but the opportunities for investment lie. So if you're sitting in sectors highly dependent on attracting that capital, I think it behooves you as an organization to reflect that in your strategies and ensure that you are demonstrating a genuine commitment to better providing the nature, the level of information to those investors that is required. But it also holds true for private non-issuers, and an understanding that, there is opportunity. There is huge opportunity in the transition that we're on. And again, for anyone who is overseeing and responsible for strategy within organizations across all sectors, understanding where those opportunities lie is a critically important responsibility of senior leadership, not only at the board, but at the senior management table. So if these are not conversations, I think that that it suggests that those organizations need to either get on board and understand how critically important it is, or they're going to be left behind, quite frankly. I think it's as simple as that.
We've been discussing primarily climate disclosures here, but the council has also been vocal that you will be prioritizing gender and diversity reporting as well. Have you found it more difficult to get that social disclosure versus environmental disclosures?
I think where the conversation has lent itself is to the issue of priority. And quite frankly, this urgency associated with better understanding our pathways to net zero 2050 and the sense that, we are running out of time and we do need to ratchet up the speed and the depth within which we're making progress. But I believe, and I think this belief is shared quite broadly across the organization membership of the council, is that long-term sustainable policy and decision-making and positioning, if it's not seen as taking into account a more integrated view of the social implications of the decisions that we make, whether they're the private decisions that we make or the public policy decisions we make, if they're not reflective of an inclusive and more diverse series of considerations, then the suggestion is they're not all that sustainable. I mean, if we're going to see in this country the kind of transition to renewables and to a broader, more diverse energy sector, and we choose to ignore social issues, whether they're Indigenous rights to governance or whether they're more broadly based in terms of diversity and inclusion, then I would suggest that we are not contemplating sustainable decision making in the long term. So we recognize that as a council, the foundation that we put in place and that we recommend associated with this TCFD mandatory disclosure regime is foundationally based on that integrated view, ensuring that not only the E, but the S and the G are reflective, truly reflective in a genuine way in the frameworks that we recommend.
And given the Canadian focus of our event, I want to end on a Canadian note. So what do you think makes Canada unique in the sustainable finance space? What differentiates it from, say, the US or Europe?
Yeah, I'm not sure I would suggest that this is unique. Perhaps it's rare that, we're a country that is clearly, obviously, dependent on, an energy sector that is in transition, particularly when you think of oil and gas in particular. And so our economic dependence on that sector is clear. And therefore, the challenges associated with how we best transition are very acute for the country. But at the same time, we are a country that is blessed with, mass, a physical mass, with, the educated population that we have, with the commodities and natural resources and the hydro resources that we bring to what we believe are going to be substantial opportunities as a country going forward.